This is Jack from Alpha Charts with a long view video. Today is March 26, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, don't forget, like and subscribe to my channel. It really does help me. I thank you all for doing that. If you can take a moment right now, just go ahead and subscribe. And this way, anytime a new video comes out, you will get the alert. All right. Anyway, so the long view. The purpose. Let me go over a quick recap in case you're new here. It's to find relative strength. And so we're looking at longer term time frames, weekly charts. All right. And this is really a video that anyone can use, but specifically people working full time that want to participate and hopefully outperform the market, but yet can't look at stocks and equities every day. They either have, a life, or they, they're busy with jobs and kids and family and whatever they're into. They just can't be watching the market every day. So this type of strategy helps take into account those things. It uses ETFs to minimize risk, right? So there's no single stock risk in this. So that helps a little bit. As far as my chart setup, I have the 8-week EMA. That's the green line. And I have the red 13-week EMA, okay? Those are the two, and they help kind of define trend. Down below, this is the trader line, relative strength line, that helps determine what is outperforming and what isn't. And again, the direction is more important than any level here. So that's something to keep in mind too, is about the direction of the trend line. And what else is important? Again, so I'm looking for, by the way, this trend line, the outperformance is compared to the SPX. Just so you know, that's why I'm on the SPX right now, and you can see it's basically, flat, right? And what am I looking for? Obviously looking for outperformance. I'm also looking for, things in uptrends, things that are basing and trying to break out, and things of that nature. A sell signal for me, because we're looking at weekly charts, would be any close below the 13-week moving average. If we get a close below that, then to me it's dead to me. All right, so there you go. So let's get started. And so I've gone through all of my ETFs and everything else, and these are the ones that I came up with. All right. So first off, we'll talk a little bit about the SPX. And on the SPX, you see there's a potential head and shoulders top that is forming. Now, I believe if price gets above this area, especially above 4,600 or so, it's totally invalidated, right? While it's below 4,600, there's a potential for it. No idea which way it's going to go, but and we've had some really strong weeks through. But again, I'm not so worried about that as much as I'm looking for what is outperforming, right? So let's get it going. All right, first off, XLE. Again, you can always buy the sector ETF, right? I mean, that's doing amazing. So XLE definitely outperforming. And let's look at what's subsectors. So XOP, just phenomenal little breakout out of this consolidation. If you've been watching these videos for the last few weeks, I've been talking about XOP a lot. Great spot if you got into it 4 weeks ago. Listen, even if you bought it someplace near the highs of this 12% move, it's still higher because the trend is going higher. OIH. Oh, by the way, I'm sorry. Let's go back 1 second. XOP. I like to show you what's in it so you know what you're buying, right? It's so important to know what you're buying in these ETFs and how it's weighted, right? Like you tell, this is an equal weight ETF, right? So, Murphy Oil is no more than Hess, no more than Diamondback, and so on and so forth. So that is XOP. OIH, again, beautiful trend, moving higher, looks great. You see the outperform, relative strength right over there. And OIH, you have Schlumberger, Halliburton, Baker Hughes, Tenaris, and so on. Here you go. So one thing you're going to realize also is that many of these ETFs are going to have some of the same companies in them. This one, I didn't see any of the same ones just with a quick search, but you're going to see it. And again, I promise you'll see it. That's okay, right? We're just looking for the best setup at the time. So, and let's be honest, if something's outperforming, it's probably in multiple ETFs that we're seeing. All right. So IOIH looks great. IXC. Now here's an interesting one. As I'm looking at this one on the weekly chart, it's up to an important area. Good accumulation happening in this one overall. There's your outperformance. Looks great. Looking at what's in there, Exxon and Chevron. Well, right there, 26% or just over a quarter of it is these two names. Again, there's Shell, Conoco, there's Total Energies, BP, Enbridge, again, and there you go. So some duplicates and some unique, and and that's how they're built. So this one though, it looks pretty good. Love the way the relative strength is stacking up on that one. XES again broke out. There's your relative strength right there. Again, if you kind of just change a little bit, you see the slope is significant, right? It's definitely outperforming. Looking at what's in there, Valaris next here, Tech Chips, Baker Hughes, Halliburton, Schlumberger, Heimler, Payne, Neighbors, Cactus, and again, so some new ones, again, equal weighted, right? But it's just made up a little bit differently. And you have to decide, is that the way you want to go or not? Again, we're going to use the charts to figure it out, but beautiful uptrend, nice outperformance. And the last one I'm going to talk about in this group for energy is going to be PXI. Again, great look, kind of really ripped higher over here. Nice accumulation. Liquidity is important. Again, that's liquid enough for me. I'm not a big player, so, that doesn't bother me that 300,000 or more is absolutely fine, and this has had a lot of volume coming in, more than average. Looking at this one, and there we go. Let's go, and let me just bring it back up because somehow it logged me out. PXI, and this will just be right back here. There you go. Again, very easily to find all this stuff. There's your right there. Okay, so again, you have Cheniere Energy, which I'm familiar with, SM, Devon's in there, Targa Resources, APA, I think it's Apache, Range Resources. Again, a nice looking group here, not quite equal weighted, but not super cap heavy either. Okay, and a good look right there too. So I do like that one. So PXI looks good. Again, plenty of volume for me. All right. So what else is looking good? XLF is looking good. So XLF, I didn't find, again, there's the outperformance, right? So we like that. But I did not find a ton in there. I only found 2 ETFs that looked good to me. So first off, insurance. Like that looks pretty cool, right? It's a good breakout right there. Again, lower volume, I get it, but it's breaking out. Definitely got the relative strength going. What's in there? Now, I know one of the things to remember is that this company just got bought out by somebody, Elegani, but it's an equal weight ETF. So yes, it's going to help the ETF move higher, but it's only 2.5% of the ETF. So there's only so much it's going to do, right? Again, there's some names some names you don't know. It doesn't really matter. All we know is that it's outperforming and it's breaking out of a nice base. So insurances, that's a good place to be, right? Also, IAK, I'm sorry. IE was, it's insurance, and IAK is another insurance. Again, you see it breaking out, good volume. Again, a little bit later on the volume. So I do like the KIE better, but when you look at IAK, it's made up a little different. It's weighted, right? So you have Chubb, Progressive, AIG, MetLife, Travelers, and so on. It's a weighted ETF. So again, if these top few aren't performing that well, it's going to keep it back a little bit. It's doing absolutely, but if they do move well, it's doing great. It was up 3.8% last week. Let's just look at KIE, see what it was up last week. 3.8, so 3.3. So you see the weighting helped it move a little bit faster than KIE. But remember, the sword will cut both ways in a weighted ETF versus equal weight. Either way, they both look pretty good. And those were the only financials that really stood out at me. Industrials, XLI. So this one also outperformance, and you can see this outperformance the last, since the beginning of the year, we'll call it. So that's a good thing. Again, it's kind of moved sideways, but within there, I have 3 sections, and they're basically the war machines, right? So ITA, aerospace and defense, beautiful outperformance here. You could actually put a little bit of a, it's kind of basing right here. It looks fine with me. And what is in there? Let's just look. You have Raytheon, Lockheed Martin, 37% are just these 2 mega companies, right? And then you have the Boeing and others, Textron, General Dynamics, Northrop Grumman, L3 Harris, whatever. But you see these 2 guys are making up over 1/3 of the index of that ETF. And it is starting to break out. Love the bullish cross, moving higher, good volume coming in, great outperformance. And we'll see if it could keep moving higher. This can potentially go much higher. XAR is another one, aerospace and defense. This one I kind of liked a little bit better because I love how it broke out, came back. I would consider this a retest, and then it's moving higher, broke the downtrend, got the nice little cross going on there. I'm going to take out this downtrend, by the way. And it looks like it's doing a great job, right? And tons of volume coming in here. You have this beautiful outperformance like that. And XAR, how does it differ? A lot of the same names. Again, a little more kind of equal weight-ish. Virgin Galactic makes up 4.5% of it, which is kind of funny. I wasn't expecting that, to be honest with you. And you see all the other products. So a little bit less on the war machine part, but it's it's the same type of ETF. I was looked at everything in there. Yeah, I'm sure there would be some of the same names, but it's, again, a little bit more equal weight than this particular one, which is ITA, which is very heavy on these 2 names. All right, so that's XAR and ARKX. So there's your ARK funds, and ARKX has been a complete disaster since it came on the market. But beginning this year, we're starting to see outperformance. Okay, so like ARK, hate ARK, I don't care. This is what I care about, right? There's your blue going up, right? So blue means it's going up, outperforming, and this pink, purplish means that it's underperforming, right? And so we are outperforming in this ETF this year versus the SPX. So looking at the ARK fund, you can see what's in here. Kratos, Trimble, the 3D printing ETF is in here, right? So you get the whole ETF, only 7% weighting on it, but still it's there. And some of the same L3, again, some other names that you're going to see here. Again, this is Kathy Wood's ETF, and it's starting to do well again, right? This was a beautiful 11% up week, then 2% up week, and again outperforming. So if you like those names, then maybe the ARK ETF makes sense for you. All right, and those were my 3 industrial names that I liked. Let's move on to tech. So tech has taken a beating, right? An absolute beating. But maybe things are starting to change for it, rising interest rates, it's always going to be a headwind for these growth techie names, most likely. But we do have maybe a breakout versus the trend line on relative strength. And we had some nice, 2 weeks, nice little movement. So when I went through a lot of technology ETFs, and there's a lot of them out there, really, cybersecurity is the only one that really just jumped out at me. And I've talked about this last week. We talked about this too. And there's 3 cybersecurity ETFs. There's CIBR, CIBR, and CIBR is here. And you see CrowdStrike and Cloudflare make up the top 2. Palo Alto Networks is in there too. Zscaler, Cisco, Splunk, Akamai, Mandiant, Infosys. I'm not even sure what that one is. Booz Allen's on there. Anyway, Juniper. All these, and again, it's not equal weight, but it's not heavily weighted either. So it's kind of nice in that respect. And again, performed very nicely last week, up 3.25%. And again, beautiful outperformance all year long. Okay. Bug is another one that's a cybersecurity ETF. Again, nice outperformance, right? You just, you can put a trend line right there and just see it just do amazing, right? Look at that. Beautiful, just uptrend and outperformance. And it's turning the corner. You got the cross this week on the weekly. I mean, just looks really good. And let's see if I can find it. There it is. So here is Bug, and you see Splunk, CrowdStrike, Cloudflare, Palo Alto. Very similar, right? Very similar. And this one I think only has 25 names in it or something like that. So it's a little weighted more in each particular name, right? Than this one is. It was just Cyber. I'm sorry, is this Cyber? No, I'm sorry, that's Bug. Oh, I apologize. This is Bug right here. Bug is Palo Alto, Checkpoint, Fortinet, NortonLifeLock, CrowdStrike, so on and so forth. Okay, so this is Bug right here. Again, these are the ones that show all, see everything. That's everything that they're holding right now. Not a bad ETF. It looks really good and breaking out. Love the bullish cross there. So there you go. And the last one is Hack, and that was the one I was showing you first. And there is Hack. Again, it's breaking the downtrend line. Everything looks good. And again, if you kind of really just change the axis, it looks fine there too. Again, didn't quite go up as much as the rest of them. And looking at I hate that this is in a way. So let me see if I can figure out how to move this. There we go. Hack. And as you can see, these are what's holding up, what it's made up of, and it's not quite as good last week as the other ones, but it's still not a bad ETF, right? But again, it's up 2.42, and something like Cyber is up 3.25. So there's a difference, right? Let's keep going. All right, so those are the only XLKs, which is a technology ETF that I really liked. Materials, XLB. So XLB is obviously in an uptrend, and there's lots of nice looking. You can just buy XLB and just be done with it. And I think that you probably aren't going to go wrong, right? Right. If it breaks out here, that's a serious breakout. XLB is leading the market, and there's a lot of different ETFs in this particular sector that are looking great. First off is GDX, right? The gold miners. So let's look at the gold miners. Like, beautiful kind of basing pattern. Now ran up, moves sideways, right? Fairly tight range above the VWAP from this week. Love that. The uptrend is undeniable. It just had, I think it just got a little bit ahead of itself. And so now it's just consolidating right under this area. I think it breaks out, and I think GDX is looking really good. The junior gold miners. Oh, hold on. Gotta tell you what's in GDX. Come on, Jacko. So there's GDX, and you have Newmont and Barrick Gold and Franco-Nevada and Agnico Eagle Mines, whatever, Wheaton Precious Metals, so on and so forth. You see that it is 25% though, these top two, and probably about 40% the top four. So it is what it is, right? If they are doing well, then it is going to do well. GDX. Now GDXJ, the junior gold miners, they're looking pretty good too. So they have this area, and I'm not sure this line actually is exactly where I wanted. It was important here, but not here. I'm just going to take this out because I don't care about that line. But it had this kind of downtrend, right? It's in a downtrend, and now price is trying to break the downtrend, right? This downtrend is from 2 years, almost 2 years ago. And we are having this nice, beautiful outperformance here and a break above here in GDXJ. And I think this thing could run, right? It's a great looking chart. Let me just break that down right there. So let's look at what's in them, right? And so you have Pan American Silver, again, not equal weight, but less weighted like the other, like GDX is. And you see some of the other smaller mines, the juniors, obviously. But listen, they seem to be doing really good. Again, there's a lot of them in here. Most of them I don't know, but some of them, you know, like Hecla Mining, you know, and SSRM, you know, so on and so forth. But it looks great, right? So that's the juniors. All right, then there's some interesting like natural resources type funds, like this one for GUNR, GUNR, right? Again, outperformance is off the charts. Looks great, big move this particular week. And looking at it, what's in there? Well, it's some of the things leading, like Nutrien, right? Fertilizer companies in Exxon and Shell are in here, and Chevron, Archer Daniels Midland, Corteva, Rio Tinto, Vale. Like, so you get like a mixture of everything in here, and it's been paying off. I mean, look at that. It's a beautiful close at the highs at the end of the week. Again, lower volume, but I don't care. Price pays, right? Yeah, maybe next week it pulls back a little bit, let the moving averages catch up. No big deal. This uptrend is intact and it's sick, and it's looking fantastic. So that's GUNR. GNR is another one very similar to it, and a great amount of volume coming in. Looks great. Did it get extended short last week? Yeah, it's starting to get extended. Again, maybe needs a day of sideways movement, inside week, whatever. But maybe give you a spot to play it if that's what you want to, if that's what you want to go. So GNR, again, Nutrients in there, BHP, Shell, Exxon, Chevron, Vale, Freeport, Glencore, and so on. So you can see the makeup very similar to GUNR in its makeup. So, you know, pick the one that you think looks best. Maybe when it's, you know, one pulls back a little bit more, if you want to get involved in it, whatever. A new one this week that came across my screen is VAW. VAW is a Vanguard Materials ETF, and it hasn't broken out yet. So that really caught my eye. But look at this. And that's the beauty right there. Relative strength has broken out, but this one is just starting its breakout move. Love to see that. That's really, really cool. And so what it's holding, so this one, Vanguard is a little bit different. So you can see as a percentage what, you know, it's heavy 27% in chemicals, 16% industrial gases, so on and so forth, and some gold miners, some fertilizers, energy, commodities. But its top holdings is Linde, Freeport, Sherwin-Williams, Newmont Mining, Air Products and Chemicals, Ecolab, Dow, DuPont, Corteva, Nucor. Kind of interesting mix, right? It's a little bit different than the other ones, which is probably why it hasn't broken out yet. But man, it's starting to look really, really good. So this VAW, man, that's solid look to it. I really like that one. All right, let's keep going. That was VAW. Okay, XME. XME broke out weeks ago, screaming higher again, way extended. You know, this was the entrance last week, you know, the week before last. You know, if you want to enter it, you know, touch the 8-day moving average, EMA, and that could have been a spot to enter it. And now it's just extended again. Wait for the pullback. I don't think it's the right place to enter it. But what is it made up of? MP is 5.3%. Now that's interesting. That's a nice spot, right? MP is a nice looking name. Cleveland Cliffs, Steel Dynamics, Alcoa, again, another steel name, Nucor, Peabody Energy, that's coal, Freeport, and Comerica Metals, right? So nice little mixture of steel names, rare earth minerals, aluminum, gold is in there, right? Freeport does some gold, they do some steel, whatever. Not steel, iron ore. So again, a nice little mix right there, but it's extended. I mean, it's just extended. So if you find a spot, that'd be great. What else is looking at? Again, outperformance. Uranium. So uranium's been on our list a few weeks. I haven't really done uranium, bought any uranium names. Again, but it is outperforming. It is great volume coming in, and it may be moving. When we look at the uranium, Cameco is 25% basically of this ETF. So it is going to weigh on it one way or the other. Just be aware of that. Everything else is much less as a percentage, right? I mean, it is outperforming. There's no doubt about that. Lots of great volume coming in. You have your bullish cross here. It's just a lot of wicks, right? A lot of wicks in these uranium names both ways. It's kind of kept me out of this particular trade. If you like it, great, go for it, right? Not for me, but again, it's outperforming. It fits all my criteria that I need, so I wanted to present it. Pick. So this is iShares Global Select Metals and Mining Producers. Nice little breakout right there. Looking at it right here. So this is Pick, and you got BHP, Rio, Vale, FCX, AAL. So you have some gold miners in here, aluminum miners, and just worldwide miners, right? It is a weighted ETF, so just be aware of that. Again, it's just now breaking out. It's a nice looking chart, right? You're looking to get into some kind of mining names. This is a potential for you, right? So it looks pretty good. Next up is some agribusiness, MOO, M-O-O. Awesome look to it. What am I going to say here? Really just it got extended, right? At this point, just got extended, and I think that you got to wait for it to come back or move sideways or something like that. It's hard to buy this one this far extended. Also, another one. I'm sorry. Let's look at. Hold on before we go on. MOO, what's in here? Deere and Company. These are weightings. Bayer, Zoetis, Nutrien. So you're getting some of the ag, well, obviously all the ags, but the fertilizers. You're getting, Deere, the people that make the machinery for it. Kubota's in there. They make machining for it. Tyson Foods, Tractor Supply, whatever. You get a lot of these names, and they're doing very, very well. And you can see that in this chart, right? It's a beautiful chart. This was the place to buy it back here, and now it's extended. Wait for the pullback, and then maybe get in. It has a similar ETF in VEGI, VEGI. Again, it looks a little bit better, more extended, crazy volume shooting into this one. And looking at VEGI, again, Deere, Nutrien, but the weightings are different, and that's why the movement's different. Archer Daniels, Corteva, same names, right? Kubota, but because the weightings are different, the chart, it was up 6.18 versus MOO, which is up 4.41, right? So they're both great ETFs. Just decide which one you like better. All right, and the last one I'm going to do in this particular one is going to be SLX. It's the steel ETF. Again, always look at the relative strength line, screaming higher, looks great. And yeah, it looks fantastic. Again, breaking out right here, looking at what makes it up. Vale, Rio Tinto, there's 29% is right there. Nucor, MT, United States Steel, Cleveland Cliffs, and so on and so forth. There's your weightings right there. like a lot of names we saw Vail and Rio Tinto and Nucor in almost in like 4 or 5 of these, right? So you see the very successful ETFs are having a lot of similar names in them across the board. So those were all my material names that I really liked. Now last week, I had my favorites, right? And so let's go and look and see how I did last week. So ICLN was a global clean energy, right? Clean energy fund. And you see it was basically a sideways movement for the week, but you are getting this cross. And I think this one will continue to maybe back in that outperformance. It just because of this little movement right here. I held it out this week. Sideways movement, but you're getting this bullish cross. There's your downtrend line. If it breaks above this downtrend line, I think it's still a good looking chart. Again, I'm going over last week's PPH. Moved higher. There's your breakout. Kind of went sideways. You got to let these moving averages catch up. Sometimes that happens, right? But this is a pharmaceutical ETF. Still looks pretty good overall. I mean, healthcare, I didn't love that. I didn't have any healthcare names this particular week, but it's not doing anything wrong. XAR was in there. I still like it. It had a nice move, 2.32% last week. Not bad. CIBR was in there, 3.25%. Again, very nice move, outperformance. I mentioned Bug last week. Again, just like CIBR, very nice move. And those are the ones I put on last week's top ETFs that I liked. All right, so overall, not too bad. Which ones do I like this week? So IXC, right over here, back up to this area. I mean, it may need a week or two to move sideways, but I really like the way this looks. It's very similar to PXI. Again, similar names. And they both look very, very good. Again, look at this volume coming in, man. That's just really sick. Again, I love the way this one broke out already before the breakout here. Just really nice look right there. So let me see. Move this again. There we go. IXC. Yeah, it's PXI right here. So PXI, and you're going to get these names, IXC, which I believe is right here. You're going to get, you're going to get these names. Okay. So again, some similar names, energy names. That's the most important thing. The insurance, KIE, I like this one because it's just now breaking out. Relative strength is moving higher, and great liquidity. By the way, they all have, if you look at PXI, enough liquidity. IXC, has tons of liquidity. That's absolutely fine, right? And you may choose liquidity as the deciding factor on which one that you want to be part of. That's another thing. All right, moving on. ITA looks great, right? Nice little move higher here in relative strength. Good volume coming in. And again, if we want to we could use this area right there as the place that we can manage risk against as it's moving higher, right? Looks really good. Its brother XAR, again, enough liquidity in both of them. This one came back, retested, moving higher. Looks really good. What else we got here? Cybersecurity. Of the three of them, cyber to me is the one that I like and the one I own. Doing everything right here at this point. Nothing not to like. So I think it continues higher there. The gold miners, GDX. Love the sideways movement here as this moves higher. I think this can break out. And GDXJ. And here we go, break out this trend line. Again, definitely outperforming. Looks really good. Love that separation already happening over here in these moving averages. I think this moves much higher. So that's GDXJ. And the last one will be VAW, the Vanguard Materials ETF. Love how the relative strength line has already gone to highs, have broken out, whereas this is just starting to break out. So that makes me really happy there. As you can see, I'm in some older names like PBJ that I entered way back when. And let's just look at the ones that I'm into right here. It hasn't done anything wrong yet from where I entered it. Don't love some of this volume, but I can easily say the uptrend is still intact. Would love to see us really start to move higher, but PBJ, again, I entered it, hasn't made a reason for me to get out of it. IHF, let's look at that one. Again, don't love this particular look right here, right? But it's just kind of a consolidation. We'll see if it moves higher or not. Right now, 275, 276 is where my stop would go. And we'll see where that goes. Moving on, you see I'm in GDX, I'm in GUNR, I'm in CIBR, I'm on the clean energy. I'm still in boat. So boat's kind of interesting because I had a special dividend in ZIM, had a rough week this week, right down 4.48%. I'm still positive in my position. And maybe it's just moving sideways. Maybe it's going to come back. I'm not sure. It was on lower volume. Uptrend is still intact. So I'm giving it some space, right? Because that's the whole point. I don't want to have to micromanage positions once I'm in them. So we'll see what happens with this one, right? Again, it's really 1, 2, 3, 4, 5, 6, 7, 8, right? So the screen, 8 moving average, it's going to be moving higher. And the red one, as it kind of moves, we go week to week. Where's 20? I'm sorry, not 20. Sorry, 13. As we keep moving, it's going to, this my stop is going to be moving up. So anyway, so as you can see, this is not every week things go up. Once you take that position, there's going to be some sideways movement. There's going to be consolidation. Sometimes they don't. Sometimes they don't just work out perfectly, like Res, right? Res didn't work out perfectly. Now it shook me out and it's moving. Now it's moving higher again. It just didn't work out. And you saw GUNR. So GUNR shook me out on, I think it was this week, right? March 9th, it says open date on March 9th. So, okay, right. So I entered here and then it shook me out here and my stop got hit, right? It was like right there. And it was probably just a little bit too tight on my stop. I should have put it under the moving average. I probably put it right above it or right near it. Probably anticipating it wasn't going to come down that far. It did. It hit it. And it shook me out. And then look what it did. So I had to buy it back and I had to buy it back higher. And that sucks. But that's the way trading works, right? So you see, I got it on March 21st, which was the beginning of the week. And so I was able to be in a profitable position already in this particular name, but yeah, so that's where we're at. So you see, I got 1 win so far this year. Not this year, since I started this. Again, I only started this recently. This gold trade I had been in for a while, but it was a relative strength trade, so I did keep it in here. So you see, so I'm not too worried about the stats just yet, because again, I've been doing this for roughly 3 weeks. So we'll see how this all turns out. But so far, again, most of these positions are in positive, on positive territory. Okay. Well, that's what I have for you today. I hope that you enjoyed this and that hope you enjoyed this and you get something out of it. Hopefully this kind of idea of using ETFs as a way to manage risk and to really aid in hopefully outperforming the market, even when we're working full time and so on and so forth. If you like this type of video, please like and subscribe. Also, you'll find me on Twitter at AlphaChart365. Every Saturday, put out state of the market video. That was this morning. It really tells me the health of the market. And then on Sunday mornings, I like to do a stocks to watch video. If you're looking for individual equities, that's the video for you. I'm really digging this this ETF trading. So it's really taking a lot of stress off of me, to be honest. And so I do like that a lot. All right. Hope you all have a great night. Take care, and I'll catch you tomorrow. Take care. Bye-bye.